Hi, thanks for watching today's video. I'm Brian, the Finance Ninja. In today's video, we're talking about Palantir's valuation. Just how much is Palantir worth today? To help answer this question, I've come up with two models, one based on DCF, the other based on multiple. So no matter which one you prefer, you'll be well served by this video. So to accomplish this, I have two spreadsheets, and each will have a fair stock price valuation. So what is the upside for Palantir stock? Before I get into that, I'm just going to tell you the results. Palantir is severely undervalued. How much, you ask? Well, you just have to watch the rest of the video to find out. Don't forget to like and subscribe. Remember, this video is for entertainment purposes only. I'm not a financial advisor. I'm not your financial advisor, so please do your own research. Let's see how Palantir stock is doing today. As of the recording of this video, it is at $22.95. That is down 1.46%. Market cap, $43 billion. Let's start with Howling Financial at Seeking Alpha. Howling placed their intrinsic value of Palantir at $20 per share using their DCF model. I value Palantir higher. He also says several things that I disagree with. I'll go into those in a later video. Don't forget to subscribe and hit that notification bell to know when that video drops. It cuts to the core of what to do with growth companies, how to value them, and more. It will drop soon. Maybe this week. We'll see. You can download these spreadsheets at my Patreon. Early bird access is only $1. The spreadsheets include the calculations, which I do not show in this video. They also allow you to adjust the numbers to see what is your fair valuation for Palantir stock. First up is my DCF model. I'm using a simplified DCF model. What is discounted cash flow? Discounted cash flow is a valuation method used to estimate the value of an investment based on its expected future cash flows. The important phrase here is cash flows. This makes DCFs a better valuation metric for some companies than others. I'll go over that later. Continuing on with Palantir's valuation, DCFs are really complicated even in the simplified model. Essentially, you take the cash flow from today until infinity, then calculate the fair value from that. It is heavily dependent on the discount rate and perpetual growth rate. The discount rate is used to determine the present value of future cash flows. The discount rate expresses the time value of money and can make the difference between whether an investment is financially viable or not. The higher it is, the lower your valuation. For example, if you look at the model, in 2026, I estimate free cash flow at $7.6 billion. However, in present dollars, that is only $4.7 billion. It is the discount rate and time that calculated that. I used a conservative discount rate of 10%. It's usually about 8%. I also used a perpetual growth rate of 2.5%. For perpetual growth, you want it to mirror GDP, so 2.5%. Today's value is the sum of all the cash flows in today's dollars. Getting into the numbers, free cash flow grows 100% for a few years, then starts declining, reaching 20% in 2031. $28 billion in 2031 may seem like a lot, but remember, AI is the IT growth industry right now. That and EVs. And Palantir is an IT company in this IT industry. We are at the beginning of the S-curve for using AI to improve business operations and many other things. We end up with a fair value today of $109 per share for a 375% upside. Multiple models are simpler. They take a future value. It can be PE or PS or some other metric. Then they look at other similar companies and find out what their multiple is. That is, how many times is their market cap compared to that metric. Then carry it to this company. Multiply the future metric by the multiple to find the future value. Then roll it back to today using a calculation based on the discount rate and time. How far in the future do you go? For Palantir, I went 10 years, since that should take us roughly to the trough to the upper part of the S-curve. I'm using revenue growth of 75% in 2022, 65% in 2023, going down to 30% in 2031. This is fair. The company is growing rapidly. I'm using a discount rate of 10%, which again is conservative in this zero interest rate environment. I use a PES multiple of 10, which is cheap in my opinion since Microsoft today has a PES multiple of over 13. And Palantir is a pure software play, whereas Microsoft has hardware and infrastructure included. Fair value comes in at $138.69. Upside is 504%. This and DCF are both very common valuation metrics. I'll go into the differences and when to choose one over the other in the video I talked about earlier. I think that video will be out in about a week. Don't forget that notification bell. Comment down below, what is your valuation for Palantir? And as you can see, these models came out much closer than anticipated. Using the DCF model, it indicates that we are 375% undervalued. Using the multiple model, that means that we are 504% undervalued. And remember, this is using today's share price. And a conservative discount rate of 10%, which is much more conservative than the typical 8%. If you want to play with the valuations to see what you think Palantir is worth, then please join my Patreon for only $1 in the early bird special. There, you can download the spreadsheets and adjust the numbers to see what valuation you think Palantir is worth. And guess what? The best part is the calculations are built in, so that means I took care of the hard part for you. Thank you to my subscribers. Smash the like button and subscribe if you haven't already. Thank you for watching, and I'll see you in the next one.